Hey guys, today is Saturday. I'm going to do a quick trade breakdown of yesterday's trading day. Yesterday was NFP, so there are a lot of lessons I learned yesterday. So it was a profitable day, but definitely not with the trade I wanted to be profitable in the end of the day. But yeah, going over yesterday's executions is a bit difficult. So right here you can see basically what I you can see my executions from yesterday, but I can't show you them on TradingView because probably if you know, or as you know, after one day your executions get removed from TradeAwait, so therefore I can't show them, only on my execution video right here. I'm going to share this in the end of the video as well, but maybe let's just pause it right here. Just maybe remember the execution marks so that you have a reference which trades I took. Basically what I did today was I shorted in the 10 macro basically 3 times right here, as you can see. Right here only entered with 1 contract and added 1, that's why you can see 2 right here, but was trading the same equity right there. So shorted right there, both got stopped. The first one is not really something I can do about. I think that's a loss which just counts in the statistic. The second loss is completely avoidable with the right stop loss management. Realized that we entered and was the right trade, and I beautifully basically just traded lower. Perfect stop loss management, perfect also target, I would say. Because I exited down here, as you can see. Maybe if this one gets away, but I don't know why it's always showing this. But that was a really clean execution down here. Unfortunately can't show you where I executed, but even below this has liquidity, perfect draw. But already from there we completely reversed with a market maker buy model. Was not expecting that, and got stopped above the high right there. And from there on I was break even. If I could have exited with 2 contracts right there, it would have been a huge winning day. But in that case, so now you can see it. It's if I move my mouse, it's going away. So then I got stopped. I was break even, and then it was, to me, I was a bit annoyed by that, I have to admit. Was trading also a bit. I was aware of my emotions, and in that case, I would not say that I traded emotion. Based off emotions. I'm still trading an eval, and therefore I want to pass it as quick as possible. Just keep in mind that on a funded you have to trade differently. After that you definitely have to be done, because that's the low resistance liquidity run we have in the with the 10 macro, and after that we have high resistance, as you see right there, to the upside. From there I entered with 2 contracts long, and in that case, unfortunately, or not unfortunately, but it just appeared that we created SMT with VS with NYOKZ kill zone buys liquidity, and also had a 3 candle SMT, so 3-minute SMT, and from there I got stopped. I think that's also not really a trade which it's just a trade which I'm content with. Now it's working. So I think the trade which I took long is it's not perfect, definitely, because we're in high resistance, but in that case the market maker buy model was definitely in play. Regular trading hours was indicating that. It was obvious that we are going to trade higher, especially regarding ES, but ES was just way stronger than NQ, and therefore we created this SMT. But it could have been also the possibility that NQ just within 1, 2, 3 minutes is up at the buys liquidity. That definitely could have been also the case, but I think with the SMT being in play, we should have basically trade our stop maybe a bit different, maybe go break even, but I got stopped there. And then you can see I entered short again, also added. To me, I was kind of liking the possibility as well of a market maker sell model with the session SMT being in play, that we still reach lower, especially for London lows. I will show you in a second everything on TradingView, just talking really quick through the executions. But once again got stopped, definitely not being able to displace lower with low resistance. As you can see, we have clearly high resistance. We are respecting especially the 10 AM opening price. That's really important. Just time distortion, high resistance, and then we tried higher, got stopped. right basically above the 930 opening price, so above the highs. Also kind of content with my stop loss placement there, because I was aware of the fact that we're definitely going to trade back into the rejection block, and I think there was a possibility that we just wick higher, take out some buy sell liquidity, and then really displace lower. But in that case, it was not the case. I got stopped, and then I went long, and I think this long is actually I'm really content with that, because it's now obvious with the long close macro, okay, we are done trading lower and we have to complete this market maker buy model. And in that case, I also trade a bit more aggressive, entered with 3 contracts, also added within the suspension block, and then perfectly exited at the 1 hour rejection block. You can see right there in the execution. And now I want to show you how regular trading hours looks, because as you see, we never reached NYOKZ kill zone buy sell liquidity, and we just reacted to the hourly rejection block. On the 1 minute, it's not as clear as on the 5 minute, but as you can see right here, perfectly respecting it, and then we trade lower, and then only with the last hour macro we were able to take out. Still, not even still, we were able to take out the NYOKZ kill zone buy sell liquidity. So that's why I'm kind of really proud of the execution. It's right here at the hourly rejection block, and that's just really perfect. Maybe let's take a quick glance at the quadrants of that hourly rejection block as well. I think that could be also quite interesting how we traded there. But then I will talk about daily conditions and so on. Quite clean to see. So as you can see right here on the 5 minute, on the 1 minute already, also respecting CE right here. The low of the rejection block. So really clean also right here. That was definitely an important level, and that's why I'm really content with the execution. But as you can see right here, I'm not really able to show you my executions. So that's basically the business of the executions, just that you have in mind what I which trades I took. And now let's break this down, what I took, what I was aiming for, what my thinking process was also with the opening. But let's start with the daily conditions. In that case, really important. So what we do have is we have clearly a bullish daily condition. After basically FOMC news, we're just trading higher. We are definitely in market maker buy model. I think we are attacking also maybe all-time highs. ES is looking way more bullish. You can see right here. So ES already trading at all-time highs again, and that's already indicating that we want to be really bullish, definitely. But what we still do have is definitely the quadrants of the wick right here, daily wicks, and also the inversion gap right here. That's what I was really just also aware of. Drop to a hourly chart. So what we basically did is we also have this hourly market maker buy model right here, you can see. So sell side of the curve and buy side of the curve. And in that case, what we see is that we really lack on a higher time frame retracement. Definitely with Wednesday, we clearly trade lower, but already with Thursday, already trading higher. And therefore, for me, it's obvious that we are going to expand higher. So now we have basically also a hourly market maker buy model right here. So in a higher time frame market maker buy model. Why do we see this formation? Because we took out external buy sell liquidity, but still that's a too shallow move to the upside. We are still going to see higher prices, definitely. But that's why we saw this retracement to the downside. Now we are back in a market maker buy model, but also right here with NYOKZ kill zone trading higher, it's just too aggressive. We cannot really follow that always, and we have such a clear session liquidity pool with NYOKZ kill zone session liquidity, with London lows, with the midnight opening price, with the consolidation down here, and the higher time frame PDRAs. Also, if we take a look on the 4-hour chart, we can see we have also this really huge wick to the downside. So also saw kind of the possibility that we're going to redeliver into the prices right here, but still trading higher now. We have to adapt, but definitely for short-term buys, I definitely wanted to see a sweep on sales liquidity, but that's also something we have to be aware of, that today we should have not really counted on a daily bearish expansion. We're definitely going to see a session retracement, a intraday retracement, but not a higher time frame retracement. The daily is still bullish, and that's why we it happened that we did not sweep even London lows, that we did not trade back to the midnight opening price or even lower into the inversion further gap quadrants of the daily inversion further gap. But we, after a sales liquidity sweep, a now second, so like third market maker buy model is in play. So we have the daily market maker buy model, the hourly market maker buy model, and now the session market maker buy model is in play. and therefore shorts are not being able right here. That's why we did not even expand it lower, and that's why I was what I should have been aware of with my execution. So that's what I'm going to talk about next, but definitely now targeting higher prices. Before we drop now lower, I want to show you regular trading hours because that's also quite interesting. So I know there's a lot of quadrants in here, but definitely interesting to talk about it. So from which is this first day, we have a huge trending new open range gap to the downside, so a discount gap, and we completely close it in. That's really already indicating that we are in bullish conditions, because if we would be in bearish conditions, we would have seen something that we respect the lower quadrant level, that we respect CE, and from there on trade lower into basically the imbalanced price action right here, because there's just still a huge inefficiency. That's what I wanted to see. We did not that. We basically clearly showed signs that we are in bullish conditions because we disrespected the quadrant levels, and that's what we have to be aware of. Today, once again, a new open range gap to the upside of 180 handles. We are in trending conditions. What do we want to see? We want basically to trade a long at best, because that's aligned with the higher time frame, but we need first to trade back to the upper quadrant level or CE, and from there on trade higher. What we did is, you can see we disrespected the upper quadrant level and CE, trade back to the lower quadrant level, also back into the previous, I would call it previous consolidation, and from there on we trade higher. There's also something to be aware of. That's just a market maker buy model indication basically, and then check out AM session liquidity and following the trend to the upside basically. Now let's go back to NQ, and I'm going to talk about my executions and what I was thinking, or what my thinking process was with the opening. So as you can see, we have also really important NFP news. And what do we see? We took out data highs, but data lows are basically still intact. Data lows are in that case our New York open kill zone says liquidity. We have London lows, we have the midnight opening price. Already also indicating really bullish conditions is that we really kind of fail to stay below the midnight opening price. So just rallying higher, that's indicating really bullish conditions. So kind of what I wanted to see, I think I will, let me do this in the back. That's not really, yeah, it looks better right like that. So what I wanted to see with the opening. So we opened up right here. What do we have? In that case, I want to see that we trade back to the sell side, sweep basically sells liquidity, and from there on trade higher. So what I would have liked is actually that that 930 manipulates lower, aggressive, and that then a market maker buy model takes place after we trade back to CE or the upper quarter level. But today was a bit different. What did we do? So that's basically right here a unfinished market maker sell model. I definitely want to see that we sweep the data lows. In that case, it's just obvious, especially with the low resistance price action right here. So that's high resistance. Many wicks just manipulating higher, and then we have low resistance to the downside. So that's a unfinished market maker sell model. I definitely want to see that we sweep data lows, and then from there we can trade. If we basically have a trade setup back to the data lows, or a long which are after a reaction of sweeping data lows, both is valid. At best we trade the long because that's aligned with the higher time frame, but it really depends on delivery. In that case, 930 did not manipulate lower but manipulate higher. That's really important, and therefore I wanted to see that we basically fail to trade higher, that we trade lower and basically just sweep the excess liquidity, maybe even expand a bit lower into London lows as well, also relative equal lows down here, and probably also back to the midnight opening price. As you know, once again, I was expecting a bit more a bearish bias, a higher time frame retracement on the hourly, right here. You have it. I was expecting that we would maybe redeliver into the wick right here. So that's why I expected kind of a more higher time frame expansion. But once again, the daily is really bullish. We should have not expected a higher time frame expansion. We should have been, or we should only expect a session retracement. That can definitely also be low resistance, but definitely not expanding beyond a session retracement. So what did I do? I took basically my first trade right here. So I entered something like, I think right here, something like that. It's not really that important if it's exactly that minute. But what I did is I wanted to have my stop right here. Because why? Because basically that's a bolo. We have a rejection block right here. That's the up close candle, and our down close candle overlaps it. So therefore that's a region I don't really want to see that we redeliver to it. We have also the inversion fair gap right there. That's what I marked out for this trade. That's what basically my indication was. We traded back to CE, to the upper quadrant level, not upper quadrant level, sorry guys, to CE of our daily quadrants of the daily wick. Just really quick glance to it, what I mean by that, if you forgot it. It's the daily wick right here. Why is this important? Because as you can see right here, the daily bodies respected it perfectly, also the wick, and we're trading just near it. It's really important how we trade there. It's just a further confirmation. Completely respected CE after taking out basically buy sell liquidity as well, and therefore I wanted to see really lower prices. I think also the inversion fair gap right there is quite interesting because we use it right here as as how you call it, as fuel higher, and therefore we trade also into it. That's also important in my opinion to see. And what we did is we respected it, as you see right there, only wicking into it. So definitely wanted to see a bearish setup right there. I think it was really clean to me, a ATM model, market maker sell model. Why? Because we are trading against the 930 manipulation to the upside. Just remember, this is our opening range gap. We still have the trending opening range gap. So therefore, I still want to see that we trade lower, that we reach at least for the upper quadrant level. And as you see, the opening is only manipulating away from it. So that's why this entry right here for me is really high quality. As you see, I marked out CE right here, and this level right here is the event horizon from London lows to New York open kill zone test liquidity. So that's also why this level is so important. Back to electronic trading hours, I got stopped there, and I think that's just how I mentioned now before, a loss which counts into the statistics. I'm completely content with that. Then we manipulated once again above the high right here. What did we do? Did we only wick into it? To me, the trade is still valid. I will still want to see that we do damage to the sell side before we trade higher. That's really important. At least if we are bullish, we're going to see a session retracement. If we are bearish, we are going to see a high time frame expansion. I was expecting a high time frame expansion, was only a session retracement, but still. I wanted to see lower prices, especially with the perfect low resistance delivery right here. Sell liquidity. That's engineered sell liquidity right in advance of the 830 opening price and also data lows. So data lows are actually right here. That's New York open kill zone sell liquidity. We could also mark it out like this. I think that's also valid. And then basically what I did is I re-entered, and that was completely right. I wanted to see that the inversion fair gap right here, which is the displacement of the manipulation leg, which is a short-term run and stop. This inversion fair gap, so this bullish fair gap, needs to fail and needs to get utilized as an inversion fair gap. As you know, I like to use the inversion fair gap of the manipulation leg, and that's what we did right here. Already entered right here. I don't even need to see a close in that case below the inversion fair gap. Of course, that's best, but to me, the setup, the drawn liquidity was just clear. I really entered right there already. And then I got stopped, I think, I don't know, something like around here, or even maybe something around here. And that's the huge mistake, because what do we have? We have this huge inefficient wick. That's just a 1 minute rejection block. And why is this rejection block so important? What makes this rejection block so important? It's not only on a 1 minute, also on the 5 minute, but not even that is why it's so important. This rejection block is so important because we took out buy sell liquidity and traded into a P-day array. In that case, also a higher time frame P-day array into the weekly or daily opening gap. And that's why this rejection block is so important, because it took out buy sell liquidity. And we should never take out this high right here, because then we completely invalidate our bearish setup. But in that case, what I should have done is just enter right here. So I'm completely fine with the entry. Could have also entered right here. That's not really, I not really care about that. But my stop has to be at least above CE of the rejection block. At best, also something like that, above the upper quadrant level. I know that's a huge stop loss. But in that case, what we are aiming for is, as you know, we are aiming for also at least NYOKZ open kill zone SSL liquidity. So this trade is already once again a yeah, you could say 2 RR trade. So that's completely valid. And as you know, we took our partial I think right before the I'm not quite sure where I took it. I think around here. So I think I took it at CE of so basically at the upper quadrant level right here of our event horizon. That's where I took my partial. So that's perfect. That's our trade. And that's the trade I want to take. So I'm really content with the first loss. But then we have to re-enter. We have to have the right stop loss placement, especially in high resistance. And that's a trade which is just so high quality. Also right here, I'm so content with my stop loss placement. I was so patient. I left it really long above here, above the daily upper quadrant level, and that's really important. Lower quadrant level, sorry guys. But also how we delivered right here is why we should have expected that we are going to retrace. First of all, we do have this fair gap right there. This right here needs to be a breakaway gap. Why? Because we leave with speed, consolidation, and break through a important, not a quadrant level, but a important level. In that case, the opening or the high of our Newton range gap. In other words, the 930 opening price. So I want to see a breakaway gap right here, and we perfectly respected it. Close below the bodies, close below it, wicked to CE and trade lower. And then we have 10 AM opening price. Also traded below it, trade back to it, traded lower, trade back to it, traded lower, short-term run stops, taking out the highs right here, and once more trade lower. So why could we have expected already that a market maker buy model is going to follow? Because we took out short-term lows so many times, and we do not see a low resistance delivery. We see a high resistance delivery into our external sales liquidity pool. And that's what's so important. It's all about structure in that case. If we would see further price action like that, I mean, okay, definitely we are going to see a retracement right here. And I think also that right here is valid, back to the 10 AM opening price. But then with the 2 candles right here, we need to see displacement once again. We need to see something like that. And then we are content. And then we are sure that we are going to expand lower. But if we really see high resistance, that we take out the highs right here and then trade lower, and then once again stop and do not really aggressively expand below the short-term low right here, then we know, okay, we have high resistance conditions. We took out a low 3 times, so that's a always engineered sales liquidity. We took it out 3 times, and therefore we have to be more aggressive with our stop. A perfect partial right here at the event horizon or the upper corner level. And yeah, then we have to trail our stop really aggressive. I think it would be above the rejection, 1 minute rejection block right here, something like that. That would be clean. Or maybe even full close there. I mean, you could have also taken your first partial at CE of today's Newton range gap and then only aim for NYOKZ kill zone SSL liquidity. That would already also be enough, because just once again with the first loss, that's a small loss, and then we have a really aggressive expansion to the downside, so we would be up a lot with that. In that case, because of wrong money management and wrong stop loss placement, I was still not up on the day. I was break even, and as you know, I'm trading my eval a bit more aggressive. I don't want to be really stuck in this eval jail, so trade a bit more aggressive. And sorry guys, I have to talk through it, and I don't want to waste so much time, so that's why I talk so in such a high speed. But so what was confirming my bullish bias? So first of all, I wanted to see, as you know, if we displace below the upper quadrant level NCE, it's likely that we're going to close in today's Newton range gap completely. And that's kind of what I was looking for with my second partial. So the level right here, which would also be near the London lows. That's PM. Do not get confused by that. Maybe I should remove this. But what we did in that case is just, as I explained before, trade back to the original consolidation, and that's why we see such an aggressive retracement from there as well. That's also why we respect the lower quadrant level. And once again, the 1 minute chart was already indicating that. That's really important. But what was indicating a bullish bias, we were expecting now the upper quadrant level. What's really important for a trending Newton range gap is that we respect the upper quadrants to the upside, basically, that we can follow the trend. And then what do we want to aim for? AM session liquidity. That's really important. If we trade a trending Newton range gap and we trade a reaction basically of the upper quadrant level or CE, we only want to aim for AM session liquidity. I have explained this many times, but I've seen it a lot. That's just based off experience, that after we took out the AM session liquidity, we definitely see a retracement, and then it takes a long time until we can even reach higher. So that's why this AM session liquidity is so important right there as well. Now back to my executions. So right here, I, as I mentioned before, entered long, and I think it's kind of valid because it's around 10:30. And I mean, the market maker buy model is in play, definitely. But in that case, I think it could have been expected that we are not really this quick just because of the SMT with ES, and we are just too early. I mean, in that case, we need a long close macro or even lunge to expand higher, because we have such an aggressive displacement higher, and therefore we need now time distortion because we cannot always rally higher from there. I mean, that's also something like a experience thing, but still I think that's a valid loss right there. Could have been dealt a bit different with basically going break even a bit more earlier after the SMTs being in play, but still content with that. The short in that case is not really so good. It's just, I think the 1 minute lower time frame price action is not even that bad, and I think my stop loss placement in here is also very good, and also my entry, my add, I think. And I think it was also able to aim for London lows, because down here, that's something I was not really, or was a bit confused by, is that we did not had any SMT being play at the lows. That's something I did not really understand, because for such a aggressive or for such a market maker buy model, I think it's I don't know, I would not say likely, but it would be kind of ideal to see a SMT that would really, in that case, then I would also, I think, have traded my stop a bit more aggressive. But yeah, still keep in mind, we do not always need a SMT being in play for a market maker buy model. Still, yeah, would have definitely liked it to see it. But therefore, I think the shorts right here are not really ideal. Could have been also dealt with the stop loss a bit different, because we don't see displacement. We really lack on low resistance, and we are clearly respecting the 10 opening price. I was then basically aware of the fact that we are now with the London close macro, especially in a market maker buy model. And once again, I want to aim for AM session liquidity. That's the high right here. That's what I was aiming for. Entered right here, around here, also added in the with the suspension block, and then executed perfectly at the hourly rejection block. Yeah, we failed to trade back to the Yoke open kill zone buys the liquidity, so I'm really content with the trade or with the exit right there, and that's basically it. So talked through it now, talked a lot, but ended up being, yeah, definitely green on the day. But yeah, that's how my trading day was yesterday. Definitely some lessons I learned, so especially regarding the trades right here with stop loss placement, because how I want to trade is I want only to take the trade right here to the downside, and then I'm done. Those trades I took after I got stopped right here, I could never do something like that on a funded account. That's really important. That's why we still have to get better with our stop loss placement. But that's basically it. So trading a bit aggressive on the eval, still a green day. Still, I think I was very good with my draw, or how my read was on price action. So I'm really happy with that. I'm definitely getting better. It's really also like stop loss placement with the trade then right here with the execution was really clean, perfect. exit right there as well, but still, there are still some lessons I have to learn. But yeah, still really content with the trade. So hope you enjoyed it. Hope you learned something new. A bit aggressive today, how I talked it through, but was also necessary. So safe trading, guys. See you next week and enjoy your weekend.